Okay, and just like that, the first trading day of 2022 is over. And investors, I'm starting to believe that we could be seeing this play out. Now, you guys know that we've clinged on to this passage from Peter Lynch in Beating the Street, where he spoke about, you could make a nice living buying stocks from the low list in November and December during the tax selling period, and then holding them through January when prices always, okay, he said it here, when prices always seem to rebound, okay, and that's known as the January effect. And as you know, this has pretty much been the case for many small caps, mid caps, even large caps. Speaking of large caps, let's take a look at this diagram that I shared with my Discord, okay? So the black line represents the Nasdaq composite over the many years since 2013. The red line represents the amount of companies in the Nasdaq at their 52-week lows, okay? So the Nasdaq has been raging higher, but look at the trend. Look at the amount of companies over that period of time from when the reversal began to happen around mid-February, right? Throughout last year, you can see it started to spike. And even towards the end, over 2,000 companies in the Nasdaq composite were trading at their 52-week lows. Or to say they were pretty much setting new 52-week lows, whereas the Nasdaq continued higher. Why is that? Simply because if you look at the components of the Nasdaq, Apple represents over 12% of the Nasdaq, then Microsoft weighed 10%, and then Amazon weighed 7%. So pretty much just between Apple and Microsoft alone, that's already 22% of the Nasdaq 100, all right? So essentially when Apple and Microsoft and then Amazon or Tesla, when these mega caps move, they move the entire Nasdaq composite, and that's why we saw it continue raging on higher, despite the number of companies at new 52-week lows continued to climb. The last time we saw a huge spike like this was during the C-Roni crash. In an efficient market, everything tanked. It wasn't just isolated to smaller mid caps or even some large caps. Everything tanked. Over 6,000 companies in the Nasdaq composite actually reached new 52-week lows. Fantastic buying opportunity there. So despite the indexes absolutely crushing it in 2021, it wasn't even close to a fair reflection of what is really transpiring in the market. And we took advantage of all these opportunities. We were buying companies that were pretty much at their low list. We started buying companies before they were at their low list. And as soon as we entered into the tax selling period in November and December, there was bloodshed, all right? So let's take a look at how we performed. On OpenDoor, we saw a very strong trading session for OpenDoor. We closed above $15 and we were up 3%, which is very, very bullish, okay? This is the main support line for OpenDoor. And, we've bounced off it a couple of times over the period of November and December. And now the fact that we closed over 15 is very, very bullish. Another iBuyer that I'm bullish on that I have got an investment in is OfferPad. Ticker symbol is OPAD. We were up 7% today. Very, very strong. This may be the beginning of us seeing the sentiment towards iBuying start to shift, because if you look at Zillow, right? Zillow typically reports their research notes on iBuying. And in Q2, when Zillow was still in the game, they reported this, that, the iBuyers are helping people move in record numbers. So this is going back September 7, 2021. So this was before we found out that Zillow themselves were imploding with iBuying. But at that time, they made us aware that iBuyers were responsible for over 1%, okay, of the US home purchases for the first time. So iBuyers had achieved 1% of the entire market share. Now, bear in mind, the entire US market for real estate is valued at $1.9 trillion, and iBuyers only represented 1%. So that was as of Q2. Now, if you look at Zillow's most recent iBuyer report, so yes, even though they're out of the game, I appreciate the fact that they're still publishing their iBuyer reports. And we've got great news, because in Q3, homeowners sold 27,244 homes worth a total of $10.6 billion using an iBuying service, okay? And that resulted with the iBuyer market share reaching 1.9% in Q3 of its market share. absolutely crushing its previous high in Q2. Now, of course, this is fantastic news, but Zillow had to try and spread some FUD, I would call it. They said the median markup for homes bought and sold by iBuyers in Q3 fell to 1.83% from 6.7% from the previous quarter. In several metros, the typical homes bought by an iBuyer in Q3 sold at a loss. Now, we now know that the iBuyers that were selling at a loss were pretty much Zillow with Zillow offers, because if you look at the report for OPENDOOR's net loss per home, you can see it's actually improved with each and every quarter. Okay, so they're actually now making more money per home than they were in Q1 of 2022 and way more in Q4 2020. Okay, while OpenDoor and OfferPad improved their net profit loss in 2021, benefiting from a record home appreciation, Zillow's, on the other hand, just got worse. We know that Zillow were overpaying. So now that Zillow's out of the game, it's pretty much a free range for OpenDoor and OfferPad to gain a monopoly in this space. But I do expect that the market share will reduce in Q4 because, of course, Zillow are no longer offering their Zillow offers. So that's one player out of the game. But that means more market share for OpenDoor to capture, because there's clearly demand for this service from customers, and OpenDoor and OfferPad are in a position to be able to fulfill that demand going forward. And don't forget OpenDoor's current blueprint. They are targeting only 4% of the market share, and that will put us in over 100 markets according to the estimation. As of Q3, we're in 44 markets, and that will put the company at a $50 billion run rate revenue. Okay, so now iBuying is at 1.9%. We expect it to drop to maybe 1.6%, maybe 1.2%. But as long as OpenDoor continues to scale and scale effectively, if we get to 4% market share, yeah, that's the blueprint. All right. So OpenDoor and OfferPad had really solid days today, as well as Airbnb. Airbnb, we traded close to this resistance many times. We did see this huge sell-off after Q3's earnings, because that's when the O variant became a thing. However, the sentiments towards the O variant is now changing, and now we're starting to see Airbnb trend upwards. Over the past couple of trading weeks, it's been quite strong, but this resistance of 171 is holding quite strong, but we did close above it today, which is bullish, but we have in the past only to retrace lower. But now that tax selling is over and the fear surrounding the O variant begins to subside, this close above this resistance level here is very bullish, and we could start to test this next level at 182. Now, Tattooed Chef, on the other hand, didn't really go nowhere. I think for the day, it was down 0.45%. There seems to be a lack of interest in Tattooed Chef, and that's absolutely fine. For me, as a long-term shareholder in Tattooed Chef, it's important that the company continues to execute, and that's exactly what they're going to continue to do. And eventually, the stock will catch up to the fundamentals, in my opinion. But yeah, Tattooed Chef didn't really do much today. Now, with regards to Celsius, we did have a green day, closing up almost 1%. However, this resistance level at $74.82 is holding strong. As you can see, it's held strong for 1, 2, 3, 4, 5, 6, and now 7 trading days in a row. I think if Celsius can successfully break above this resistance level here and continue higher, that would be very bullish for the company. And I think if it's going to happen, it's going to happen this month, because again, tax selling is done, and we expect those that sold out for tax loss harvesting purposes to start making their way back into the stock. Okay, Big C is another company that I've invested in. Had a strong day today, up 5.60%, but this company is one of those companies that's set new all-time lows. Yeah, it's got a long way to go, but as long as the company continues to execute, I'm game. My average in Big C is about $45 now, so I am down in my position. I don't necessarily plan to add at this stage. I want to wait for Q4, because I think they're going to have a very strong Q4 period, and Big C is one of those companies whereby I will be happy to add to it as they continue to perform. Okay, so it's not a huge position in my portfolio, but it's a position that I do want to add, but I want to see how we do in Q4. Now, another company that we've invested in recently that's just absolutely taken off, Tesla. Tesla, I covered Tesla yesterday, needs no introduction. An absolutely mammoth of a day, up 13%. Yeah, beast mode, and it's currently up in after hours as well. Yeah, Tesla beast mode. Now HIMS, we're starting to make a strong recovery. You can see with HIMS, I mean, let's just zoom out. It's ugly, okay? You want to talk about quality companies that have been executing over the past couple of months, but still trading towards their 52-week lows. That's HIMS. That's HIMS all day long. And yeah, HIMS has got a long way to go. I've been averaging down. My average is about $8.30 now. So still a long way to go before I even reach break even. But HIMS is a long-term investment for me. I plan to hold this for as long as the company and the management continue to execute. No plans to sell. My position in HIMS was built months ago, but I just keep adding to it and averaging down. So my position is way larger than I originally intended it to be. But hey, it happens. You take advantage of declines, right? Corsair is another position that we started building recently. Again, it's another company that's just been hammered pretty much throughout 2021. If you got in at any time during 2021, it's been a ride for you. And here, so now we've got Corsair testing resistance right here from the Fibonacci at $22.17. If it can break above it, again, that's very bullish. But yeah, it's a long way to go. Palantir, very, very similar circumstances. Palantir, to be fair, did range throughout most of 2021. It hasn't been hit like other companies that we've spoken about already. If we can eventually get back over $20, you know, and the company continues to execute as they have been, and if we can break through these resistance levels at 21.66, 23.13 going into Q4's earnings, that'll be very, very bullish. And yeah, that's Palantir. So to wrap up the January effects, are we going to see it? I am optimistic. Yes, we are going to see it, and we're going to see a strong rally this month. I'm very optimistic. I'm looking forward to it, but most importantly, I'm looking forward to Q4 earnings. I know many of my companies will be reporting their earnings early February, and if the sentiment towards small and mid caps has now changed, then we should be rewarded with the momentum that we see in January going into February, but that remains to be seen. So if you gain any value, please make sure you smash that like button. If you're new to the channel, hit that subscribe button and the notification bell if you want to stay up to date with all of my latest videos. If you want to join my Discord group where I share all of my research notes, my buy and sell alerts, and we just share anything that we see and have discussions in the Discord with many other members in the channel. If you are interested in that, then you can click the Patreon link in the description below and get yourself in the Discord. So with that said, thanks so much for watching, and I'll catch you in the next one. Peace.